Telly Boo, how are you? Yo, yo, yo. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of placing trade plans. Happy Q3, as Gary says. Same to you, sir. That being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Hey, comment Telly-Vu, how are you? Ni hao ma? Or as they say in Manchester, wah. How was your holiday? How was your weekend? Huh? Everything good? Yeah? Yeah? No? Keyboard broken? Okay, well, hey. What are we going to do today? Well, I guess we'll do some technical analysis. Take a look at the charts. I think we got to do some fundamentals. Dollar's ripper strong. You got fired? What, somebody shot at you, or did you get let go from your job? Okay, yeah, we need to talk about fundamentals. The dollar's ripper strong today, and there's rationale for it. Money is flowing out of fear. You quit? Interesting. Okay, that's interesting. So anyways, so we'll talk about why the dollar's strong today and why the yen is strong today. Well, the yen is supposed to be strong. We talked about that a lot last week. It's supposed to be strong. We're just worried about the Bank of Japan. That's all. Google is telling me now would be a good time to insert an ad. No, thank you, YouTube. YouTube's like, hey, I want to make the 3 pennies. Anyways, so we'll talk all about that, and we'll go about our trading. Yeah. Now, tomorrow is the beginning of the oil trading group. Oh, I'm so excited. I've been working all weekend. I even took half of a vacation off where I went to Florida for 3 days with my family. Had a good time, and then sent them off to the beach, and they went to a different place and sat there for days. And I came home early. I flew home and worked on the oil thing, and then then they came home over the weekend for 4th of July. I worked all weekend. My wife was even pissed. She's like, you need more balance. You need to spend more time with me. And I'm like, but this is important. So I'm super excited about the oil course coming up tomorrow. I'm just wrapping up lecture 3 and starting lecture 4, so I'm very excited. So I'm about a month ahead. Cool. Did anyone get an email from me over the weekend about the oil course? I know a few more people signed up, which is cool. I even got a few emails of people who are just as excited as I am. Big thumbs up. Yeah, here we go. Yeah. Here's the thing. I got a lot of hate mail. A lot. Really bummed me out. I got a lot of nasty grams. People... I don't know what's going on. Maybe the world is upside down, topsy-turvy. But I got a lot of hate, man. A lot of hate. And I was really bummed out because I'm putting all this energy in it. But I love it. Like, I'm super excited for it. I do it for myself. But I want to share, and I think it's important. So anyway, so I got a lot of really angry, nasty. A lot of them are like, hey man, you're an a-hole. Look, I get that all the time. You put yourself out, right? You put yourself out in the world, you're gonna get hate. Okay, fine, I can deal with that. But a lot of people sent me emails are like, dude, you're only doing this for the money. And I'm like, what the? So I thought about, at first I was like, I was offended, and then I was angry, and then I'm like, normal human responses. But look, again, these are skulls on my wrist. I'm studying Stoicism, and I thought, well, what would Marcus Aurelius do? And it was, a Stoic would step back and say, look, people are communicating. You don't need to be threatened. You don't need to respond emotionally. You can be stoic about it. And really, instead, think, what's being communicated here. Now, some people will never sign up because they don't like me. For some reason, they still log into the videos. Okay, great. And then the second thing is they're not interested in trading oil. So it doesn't really, if they hate me or if they're not zero interest in oil trading, then nothing's going to happen. But what's the communication people are saying? Like, you're only doing this for money. And I'm thinking, you know what? It's the price, I think. Now, the way I got to it is I thought about it. The oil course I took at Harvard was at least $5,000. I couldn't remember. $5,000. It might have been $7,000, but I said, it was at least $5,000, so I'll charge $500, 90% cheaper, right? And I just thought that just made sense. But again, people are signing up, but again, a lot of people just responded with just anger and hate, and I'm like, oh my God. So here's what I just did. If that's what it was, I mispriced it. Look, we're going into a global recession and all this stuff. I get it. So I just cut the price by 50%. Dude, my assistant cost me $100 an hour. Okay. I'm spending like 100 hours putting it together, right? But anyways, I just cut the price by 50%. I hope you sign up. You don't need a coupon code. You can just go to the link. You can click it. And I'm going to take anyone else that signs up, and I'm going to give that money to the original people that signed up. And just to show it's not about the money. Okay. Don't worry about the coupon code. You just go there now. Your customer is $250. That's it. And I'm going to take all that, and I'm going to give that to the original people that signed up. So everyone just got it for 50% off. That's that. So all I can say is I'm sorry if I came across wrong. I am super excited about it. I asked people. People seemed like they wanted the course. I priced it simply by going, how about 90% cheaper than what I paid? Apparently I've offended a lot of people, so I apologize for that. And so that's what I did in response. I'm trying to be stoic. I'm trying to be a better person. So if I rubbed you the wrong way, I do apologize for that. So there you go. Okay. There you go. So, and I'll show you. I think I have the page here, right? So this is the old one. And I refreshed the page, and now it's $249. I was messing around with the form here. That's why you don't need a coupon code. Oh, you can't see what I'm doing anyways. Hang on. I have to move this over live screen. So this was $500, and now it doesn't work. Anyways, it was $500. I refreshed it, and now it's $249. Okay. Yeah, Peter. So I don't know. Look, all I can do is try to interpret what it was. Okay. That's all I can do is interpret what it was. And so if the price made it seem like I was being greedy, then I apologize for that. I make up the price. Obviously, I make it up. I have many thousands of dollars of costs, of course, not including my time. And it'd be great if I was compensated for my time. But look, if it feels like I'm, robbing people, then dude, that's not my intent. And obviously I came across that way, so I apologize. Okay. So there you go. Okay. The schedule will be, right now I have it as Wednesdays at 4 p.m. So tomorrow at 4 p.m. That could change. It takes a lot of time to put these lectures together. It's very, very intensive. 2 people working many hours every single day. You know, one of them is a PhD and I only have a master's degree. So you got a lot of brain power putting this together, but honestly, it's good. It's good. I'm telling you, it's good. So I'm going to start on conventional drilling and infrastructure. That's the next one that we're starting. Okay. Anyways, there we go. So let me get back to this. Got to go back to, well, usually when I'm in this view, what I'm telling you is in the description below, there are many important links. One to fxbootcamp.com, one to my book, one to free training videos. FX Bootcamp is obviously premium. And dude, again, if you think about it, like being accused that I'm doing it for the money, it's $88 a year. It'd be like the dumbest scam in the world, $88 a year. So I don't think it's about the money. But anyway, 65 hours of training there. And then a link to tradersway.com, a trustworthy, ethical broker. You need a broker. They earned my loyalty and respect through their actions, not through advertisements. So look, try them out. Tradersway.com, open up a demo account, click the link in the description below, or don't click the link in the description below. You can go in and sign up. Tradersway.com. Okay. Would I be adding the course to the video list next year? Right now, Peter, it's summer school. It's intense. It's live. You're getting the knowledge and skills immediately. And then when it's over in like September, October, then there's going to be a live oil trading group where we practice together implementing the strategies that you've learned. And so people can do that through the end of the year. And then it'll be put in the archive at FX Bootcamp next year. So if you want to trade oil while oil is hot, obviously it's a good asset class to be in. It's the top of the pecking order as far as macroeconomics right now and geopolitical risk. If you want to add that to your repertoire, yeah, pay the $250. Right? On one mini lot, that's probably one trade. Now, of course, you could lose on that same trade, but no, so anyways, add that to the repertoire. And then next year, I'll add it to the archive. And next year, maybe we'll study something else. I'm interested in taking a couple of classes. There's a 1-year program that I can take on farming. A 1-year program on farming. I'm thinking about doing that. Okay. Okay. All right. All right. So anyways, one of the things I want to talk about today is the dollar is moving, euro and pound are moving because of the energy industry, the energy complex. Okay. And no, it's not an ad for a course. This is actually happening. Like I said, it's the top, right? Did you also say there will be a live trading sessions? Yes, 15 hours, probably 15 days worth of setting that up. Okay. Your customer says, my broker doesn't allow many lots on oil. Then get a different broker for your oil trading. Not right? Most brokers are not best at everything. Okay. Okay. Johnny says oil just dropped $5. Yeah, that would be worth $500 on a mini lot. And that would be on one day, right? So anyways, so going back to this is not an advertisement for the course, but it just shows you the importance right now. So there's a strike going on in Norway. They're not going to be sending natural gas to Europe. Holy shit. Europe is dying for oil. They're natural gas. They're desperate. And Norway's going on strike. No natural gas. Oh my God. Okay? Pain, man. Pain. And what's the result? Well, this is Europe, and it got crushed, and then pound crushed. Now, Canada benefited. That's normal macroeconomics. That's risk off, baby. US dollar got ripper strong. All of this makes sense. You need to know all this stuff. All this makes sense. And that happened yesterday on the strike. And Euro just got blasted. And there we are. Destroyed. Holy schnicker schnacker. Okay. But let's see what you guys are interested in. Thank you for your vote, by the way. Appreciate it. Adam says, Euro at a 20-year low. Yeah, but it doesn't even matter. I mean, I know psychologically that's important. You might say technically it's important. And technically it'll probably be important for a while. But this is money flowing out of Europe. People aren't playing this technically. They're running for the hills because there's a tsunami. They're not going for the view. Oh, the view is so pretty on top of the hill. They're running for their life because there's a disaster on its way, and it's the water is at your heels and you're running, and it's not for the view. Okay? But yes, the view from the top of the hill is beautiful. And I've actually seen it. Have you seen the tsunami videos of like the one that hit Japan? And the people are literally on the hill, and other people are just getting up the hill. And then the little town right under the hill gets wiped away. Like the entire buildings come up and leave. And it's like, and yeah, the view was pretty, but it was disturbing at the same time. Okay. Cool. Yeah, terrible. Cool. Okay. Amazing, right? So think of it that way. This is a flow. Okay. Now, Euro is the most traded currency pair by far in the foreign exchange market. So when Adam says we're at a 20-year low, what can happen is you can get choppiness, you can get whipsawing, because there are so many people trading it for different reasons. Okay? For example, a basic weekly swing trade has already occurred. Okay? A typical trade, actually it would say 102. So really, if you sold here, the target would be here. Now, this poses a couple of different things. Now I'm talking technical. Remember, this is technical analysis. It's incredibly important, in particular, just reading your charts of where bulls and bears are likely to be. But remember, fundamentally, this can drop very significantly. When we were up here around 1.9, 1.10, I was talking parity and below. And I'm not one of those guys that makes a big thing about parity, but I'm like, this time there's a lot going on to bring us back below parity. So anyways, what the chart says is this is a sell, and if that's your sell, this is your target on a weekly basis. Now, the next part of technical analysis will tell you if you hit this target early in the week and this target early in the month, you will likely get a big pullback. Now, why does that occur? Is it people buying? I don't really think so. I think it's profit taking. And then maybe back down. Okay? But profit taking. Question is, are traders trading this for the profit, or are they moving their money? And maybe technical analysis breaks down, and maybe we just blow through these pivots, because the pivots are simply telling us based on what happened last month. Maybe this was the high, this was the low, and a closed low, so the pivot drops, and therefore this is that based on this. But now, if we're getting into a point where there's no natural gas in Europe, they can't get it from Norway, Putin's likely to come in and screw things up worse, and they're like, dude, nobody gives two hoots about your stupid pivots. They're running for their lives. Paulo says, hey, I put this together a long time ago. Cool. You're welcome. So is anyone going to sign up for the oil course tomorrow now that it's half price? Did it matter at all? Doesn't matter? Or does it matter? I was bummed out a lot of the weekend, and I'm like, it must be I don't know what else it would be, unless you just really don't care, and then I understand that too. Well, actually, I don't understand that, but somebody just pinged me. What's going on? Oh, cool! My electrician's on the way. Okay. So anyways, I hope to see you guys tomorrow. Mark says, when it's risk off, levels do not hold. Yeah, it's more emotional, isn't it, Mark? I don't know if I can confirm what you're saying, but I get it. I get it. Okay. Okay. Here we are now. And this was a very critical price on pound. Okay. In a normal year, if you sold here, your exit would be here. Okay. And now we are at S3. And here's the bizarre point. I don't have another level. Now, a few months ago, one of the things I said is be prepared for euro to go to parity, but don't be shocked if pound goes to parity. I said it's not a prediction, but it seems more and more realistic because, I don't know. I've talked about the fundamentals and the monetary policy of the UK for a year, pointing this down. So now it's like, if this falls another year, and of course I'm thinking, is there gonna be a break? Gee whiz, I don't know, but I don't have any other. These are annual pivots, and I think was it the day trading group? I went back 25 years, and this has only occurred 3 times. And dude, we're only at the halfway mark, and I don't think things are gonna get better. This is rare. 3 times out of 25. Okay? Less than 10% of the time. Just like, I don't have any other lines. I'd have to start calculating other pivots. But the thing is, you can do the calculations out to infinity. But an S4? An S5? Like, I don't trade S4s and S5s. I can't tell you, hey, my 20 years of experience trading Forex, when you get to the annual S5, this is what you do. I'm like, dude, I don't know if I've even seen it, but it's possible. So I'm like, wowzer. So now you got to rely on your monthly pivots, assuming last month was volatile. How volatile will this month be? But I just want to make that point of this is extraordinary. Okay. Mukisa says, hey, why would oil fall if there's a supply shortage? Well, this is one of the things we're going to cover in the fundamentals of oil. But you're like, okay, this is price, this is quantity. And you're like, Wayne, if there's a supply curve, okay, and a demand curve, and you fix demand, and supply falls, you get a shift in equilibrium, right? So you get the old quantity and the old price. So price at equilibrium, quantity at equilibrium. Then there's a shortage, so you get this new area, new equilibrium. And I'll do this in a different color. Okay. So P2 is up here and Q2 is here. So quantity has fallen of supply. And because demand is fixed, price has gone up. Mukisa says, so why did oil prices fall? Matrix, that was updated in November. Okay? And it had to do with Omicron in the United States, but more importantly, in China. Okay? Right? And the policy at the Fed, because of the fiscal policy of the United States or whatever, right? Well, what happened was the normal market was abandoned. So I would still agree with everything I said. Okay? But what happened now is typically when you go into recession matrix, let's say it's just a normal recession. Right? What does the Fed do? The Fed saves you. They lower interest rates. But that's not what we have now. And in fact, the Fed is now raising interest rates going into recession. And that's like, this is extremely abnormal. This is all of it due to fiscal. It's hard for me to I disagree with a lot of it. And I disagreed when it happened, the fiscal stimulus. I said, save people that need saving, extend unemployment benefits, and do other programs to support those that have lost their jobs. Totally for that. I was even for Build Back Better. If you actually build a bridge, if you actually pave a road, if you actually improve an airport, a train station, if you're building electric trains through a city, whatever the government wants to do, as long as you actually build something, I'm 100% for it. And everyone that's done the macroeconomics course knows the solo growth model, and you're like, oh yeah, well, you're shifting the steady state. I'm 100% for that. But it was all this stuff that was like free money for everybody. Oh, we're going to do Build Back Better, but 90% of it's going to be for non-infrastructure stuff, even though it was an infrastructure bill. But almost all of it had nothing to do with infrastructure. I'm like, that's all bad. That's all bad. There's no return. And so Matrix, what happened was, I believe the fiscal government, not the central bank. See, a central bank can pump money into the market and take it right back, and it's easy. And if you go all the way back to Milton Friedman, let's say 60 years ago, he said the only way to create inflation is fiscal spending. That's it. There's no other way. And I tend to agree with that. And this was a huge social experiment where we tried for 15 years to create inflation. We couldn't do it. And right, the central bank couldn't do it. The central bank added trillions of dollars, couldn't do it. The federal government did it, and it was about, less than a year? And we have crippling inflation. So we're in this really abnormal place, Matrix. So I responded at the bottom of COVID. The Fed was slashing interest rates. We were considering going to negative interest rates. And then one day they said, we are not going to go negative. And I said, that's it, right? Sell the US dollar. You understand? And that's when I said, sell the US dollar and probably for the next 5 years. And that was based on, we'll get through Omicron, the supply chain will normalize, the Fed will go from negative interest rates and then eventually raise interest rates again. And that would all be normal. And during that period of raising interest rates, the dollar would be weak. But now there's something different going on. The Fed is raising interest rates. And you're like, well, isn't that's what's happening? No, but we are killing the economy. See, normally you raise interest rates when the economy is booming and inflation is still low. Growth is above inflation in a normal market. Productivity is higher than inflation. So you might have 3% productivity and 2.5% inflation, and everybody's rich, everybody's working, everybody's productive, and prices are lower than your wages. And wages are not high because you don't need much money, because what happens is, yeah, every few years you get a small raise, but every time you go to the Sam's Club, I love going to Sam's Club because I don't go very often. When I go in there, I'm like, dude, look how cheap the TVs are. I always go to the TVs to measure inflation, right? And I'm like, look at the TVs get bigger and better and cheaper every time I go into a Sam's Club, which is, by the way, if you don't know what a Sam's Club is, it's a Walmart-run company, but it's just a warehouse. And you just walk in and it's boxes of TVs and they have one TV up there. And every year they get bigger, like 85-inch, 8K TV, and you're like, it's $800. I'm like, holy crap, it's unbelievable, right? But that's not what's happening anymore, Matrix, and that's what throws everything else, throws everything out the window. It's right when we got to like Omicron happened, the economy started falling again, and China got shut down, so we got supply chain problems, and then inflation went up because we ate through all the inventory, and all of a sudden, world hurt. And what happened was there was artificial demand when there was no supply. And it was just terrible economic logic from the federal government, in my humble opinion. But I'm an economist, and I'm like, it was dumb. It was negligent. Right? But whatever. So that's what changed. When Omicron hit, I was selling US dollar, and then all of a sudden it got ripper strong, and it all fell apart there. And all the seasonality died, and everything changed, and all of a sudden you started, the 10-year T-note went from 1.5 to 3.5. You're like, holy smokes. And whatever. So that the fundamentals changed. There was all of a sudden there was a reckoning, a price that needed to be paid. And so that what changed. Okay. Now going back to the other question that, who asked it? Oh, too many questions before. Okay. I can't remember who. Mukisa asked. Okay. Mukisa's like, why did oil prices fall if quantity is low? I saw what you had posted. I'm not against it. You didn't have to delete it. This had to do with student loans. It creates a moral hazard is what happens, right? Because now I'm pissed off because I had to pay back my student loans. It took me many years as a young man to pay off my student loans. Now you don't have to pay your student loans? I'm like, dude, but you borrowed and you promised to pay it back. I'm like, there's a moral hazard now. Do I not have to pay my mortgage? Do I not have to pay my credit card? So it's just, but But look, if it's a true investment for society where it increases productivity, less people go to jail because they're more educated, less people, more people. I mean, education can be, the benefits can be seen, especially in a third world country where you educate a population that may have almost no education to suddenly decent education. The return on investment is massive. So, but it has been pitched that way. Maybe the European model is there, but then you got to raise taxes. You can't just spend. And if politicians say, well, we want to do this, but we don't want to raise taxes, then don't do it. But whatever. So, Makisa, you ask this question and you're like, and you're right. Supplies are low, demand is constant, yet prices have fallen, not risen. Why? Then you're asking the wrong question. Because you're right, supplies are low, so prices should be higher. Well, they're not higher now. Why? Well, it wouldn't be a supply issue. Okay? No, I got it. I'm back here. It's not a supply issue. So we got to figure out now it's a double shift is what it's called. And again, anyone that's taken my macroeconomics course knows that if you have a double shift, it's indeterminate. There's two variables and you don't know the degree of each variable. So you can't quite decide what's going on. I mean, you could try to model it, right? And you would say, well, what's happening? What would make oil prices fall? And it's a question right at now of shifting the demand curve based on the rest of this year and next year. Okay? And the reason it's indeterminate because let's say, let me make this blue. You shift to D2 now, and now you're like, okay, supply is low, okay, and we're shifting demand, so demand is falling. If supply was constant here, right to this equilibrium, price would fall. But now if we're going up to this equilibrium, price is slightly higher, but not as high. But if demand falls even more, then even though supply is high, price can still fall. And it depends on where the new equilibrium is. But I want you to think, like your first thought is right. Supply is low, therefore price should be high, but price is down. You should say, well, what would cause that? Okay? And you might say, well, maybe it's a demand issue. And so what we're pricing in is the recession next year. But in my theory, we will get that kind of figured out. And by the way, in the swing trading group last week, all I did was fundamentals because of the holiday. I didn't do any technicals. We actually looked at the yield curve. Well, not actually. We looked at next year's implied terminal rate and showed this shifting, how it would impact things like future demand, okay? And how this is shifting. And so right now, we're also the oil traders are doing the same thing the bond traders are. They know the supply. Now they're trying to figure out the demand, and then they'll get a better handle on demand, and then we'll go back to supply. Okay? Okay? Thank you, Sammy. Okay? You understand? Like, so you're on the right track, but you got to ask the next question. If the supply side of the equation doesn't make sense, then it must be a demand issue. Because supply is easy. You can just look it up and you're like, well, supplies are not that good in Cushing, Oklahoma. Oh, okay, so it's not a supply issue. Supply would indicate higher prices. So keep that as your card in the near future. So now you're like, okay, we're going through a demand issue. Once we get demand stabilized, then we'll rotate back to supply and saying even with lower demand, there's still even lower supply. And even if we skew everything so that we need, let's say, less oil than normal, there's still less oil than normal, and then therefore we'd have that elevated price. Then lastly, the third part of this is that's what's happening now. We're trying to figure out things. What's the exogenous shock, if any, that could happen? Okay. And it could be things like Norway stops selling natural gas. Oh, you don't agree? Please explain. By the way, I want to go back to having people log in, FX boot campers log in live. I was thinking that, with the education thing. Okay. Yeah, free education leads to work slavery. Yeah, I probably disagree with that too, Meta. That's strong. Right. But that's a strong statement, but there's some truth in it. But also, we're not going to discuss this today. But one of the things I'd like to do is have boot campers log in to Zoom and then have conversations with me. Yeah. That is an interesting conversation, mate, actually. But so what I was thinking is have boot campers log into a Zoom meeting, have you guys in these live streams on YouTube. And actually, I'd like to talk to you guys, maybe not about the Cuban doctor model, but yeah, it's much too interesting of a topic, Meta. It's fabulously interesting and debatable. That's the point, right? But not without a mojito, right? Or a rum and coke. Okay. So anyways, I thought it'd be great to have conversations, like maybe Meta ask a question and with a microphone, Jim can come in and I can ask Jim questions and, so on and so forth. I think it would be cool. So hopefully you guys are into that. I'm trying to think of ways to improve. We're at a turning point in the year. Some people wait till, New Year's Eve to have resolutions. I'm trying to have them, 3 or 4 times a year, right? Peter absolutely would be awesome to have open dialogues, right? Like, I think it would be epic. Okay. Cool. I think also I want to tighten up these meetings. Okay. Awesome, Meta. Yeah, I think we could have some great conversations. So anyway, so oil, dollar is strong here. I've locked in now on this trade. What is that? 220 pips. Let me put it back here. All right, there's 200 pips profit locked in. I could lock in more, I guess. I'm over here, 250. I guess I'll do that. All right. 250 pips locked in on that trade. Cool. Sidetracked and you left off the macro. No. I was finished with the oil one. I was finished with that, I think, unless I got sidetracked on the oil one. Sorry if I did. I don't remember before that, but my point was it's not a supply issue that we're dealing with right now. We already know that and we priced that in, and then suddenly now there's a demand side. So now you got to figure that out on your own. Okay. It's either more demand now, less demand, or the same amount of demand. And remember, we fixed demand and shifted the supply curve and prices would go up, but prices have gone down. So therefore, what's the double shift? Did demand go up or did demand go down? Okay. But if I have forgotten the previous topic before that, let me know. I'm happy to talk about it. Okay. But this is the strike in Norway, and that's it. It's adversely affecting Europe. I don't know why I have euro dollar twice. Aussie, Kiwi, Okay. Pound getting crushed. Okay. And dollar significantly stronger than Swiss franc, and Swiss franc was strong. Now, I want to give you a different point of view for the euro. Now, it was about a month and a half ago, maybe 2 months ago, I said, don't be shocked if we're going to parity. Do not be shocked. Now, I said some bad things need to happen, but those bad things are pretty realistic since you have a war going on. Okay? So, why would euro go to parity? Now, obviously paying 100% of your GDP just for energy, sure. And I think things can get worse. I think Putin has waited and is going to punish Europe. I don't think it's even happened yet. I think he's been focused on his own little war and in the Ukraine, and he's doing everything. And I have some opinions on what his goals are and his ambitions are. I think he's 2 or 3 moves ahead. I think he looks at Western Europe and the United States like a bunch of yappy, barking dogs. And he's an 800-pound gorilla, right? And he doesn't care. So I think he has a stalemate type outcome, but I think he's also pissed, right? So I think he's going to want to punish some people, and that hasn't even happened yet. So there's a lot of reasons why euro could go to parity. But I wanted to show you this. Oh, this I can't zoom in, huh? I can't zoom in on this. Oops. Can't zoom in on this. Hopefully you can see it. I thought I could zoom in. Do you want to know what this is? Let's see if I can bring it back. Where's the original page? Funny thing is the original page, I clicked it and it changed the page. Can't find it. That is German, if I remember correctly. German trade balance. Okay, now Germany is a massive exporter, in the top 5 exporting countries of the entire world. Like China, Japan, the United States, Germany. Like something like that. Incredible, right? Think of all the German cars. Audi, Volkswagen, Porsche. What else is there? I mean, they're all the same thing. The Lamborghini. The Lamborghini. The funny thing is the new Lamborghini SUV is just a Porsche SUV, which is just a Volkswagen SUV. Mercedes, thank you. I knew I was missing one. Like, just think of that industry in of itself, right? Like, amazing exporters. But check this out. Even so, it seems like they're exporting less and importing more, to the point where there's a huge export, which means money going into euro. This is foreigners, because this is net X, right? Foreigners are buying euro to buy these cars, as an example. So you got to buy the euro first, and then you get your German car. And then Germany has extra money. This is all extra money for Germany. And then you can buy stuff with it, like cheap natural gas from the Russians. So suddenly you're not selling any cars. You can see this drop because of COVID. Okay? And then all of a sudden, just recently, oh my God, natural gas is going up, 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 up. So you're selling your euro. You get that? Selling euro to import something. So Germany specifically is exporting euros to import natural gas, And at the same time, nobody's buying euro to buy cars because they might not even be making cars. BMW once a month sends me a letter. They want to buy my BMW that I bought from them. They want to buy it back. I have more BMWs than BMW does, which is one. So what this looks like is Germany is not exporting, not even remotely close, which means no euro demand. Okay, so you got to go back to this equation. Okay, quantity of euro, the price of euro, although I like to have the value of euro. Okay, value of euro, we'll call this euro. Okay, and right, there's demand, and this is supply. Why? Why is supply like that? Well, in the beginning, there's only that much euro. Okay, so anyways, one of the things we can look at here is nobody's demanding euro. Okay, so the price goes from, or the value of euro, this is value 1, and then there's value 2. Okay, and now you got to then go into the interbanking system, and now you have to redraw all this. And the interbanking system is different. Okay, and very often in economics, you have to have two charts. And there is supply and demand. Supply can change. Because the other one had to do with the amount of euro in Europe. But now how about the amount of euro in the interbanking system? And what Germany is now doing, no one wants euro. They're not buying euro so that they can buy a German car. But then Germany has to spend twice as much on natural gas, 3 times as much on natural gas in the interbanking system. Okay, and then the supply here goes up. This because they're spending twice as much Q1 to Q2. Okay? And look at the effect here. Value goes. So they're not exporting, which would push the value of the euro up, but they are importing a hell of a lot more, and that pushes the euro down. And when you get all of that, like no demand and just more supply, oy vey, that could be bad for the euro. Yes, German companies were benefiting from cheap Russian gas. Yes. Yes. And one of the reasons America is filthy, stinking rich, or at least used to be filthy, stinking rich, regards the world, I will discuss in the oil trading course. You will see how, so in the second lecture, the first lecture is just a quick overview of everything. In the second lecture, I go over the history of energy globally since 1850. And I'll discuss what Rockefeller actually did, why World War I took place, how OPEC got created, energy being used as weapons, how non-conventional oil came about, the effect of wars in the Middle East, and really how America was involved in almost all of it, and why Britain got what it got and why Germany did its thing. Like it just there's a huge interesting thing. But how did America get so unbelievably wealthy? Had a lot to do with geopolitical politics around the energy complex in history, and some of the earliest moves in the development of the oil industry. It's fabulously interesting, in my humble opinion, which is cool, right? So we can discuss how a lot of this impacted currencies and economies and all that kind of stuff. And so on and so forth. Super interesting. So it's only like 170 years. And I'm going, you know, I don't know. I find it terribly interesting. You know, okay. So how long will euro fall? Well, that's for you to figure out, but you got to figure out why it could. That's why we have to have an intellectual conversation about, like, are you looking at German trade balance and trying to figure out, well, how could that happen? Now, do I actually know how many cars Volkswagen is selling, how many cars Audi is selling, how many cars Mercedes is selling, how many cars are Porsche selling? I could go that deep. I could do that deep dive. Now, I haven't, so I just throw in some assumptions that normally Germany, for the last 30, 40, 50, 60 years, is exporting a heck of a lot more than it imports. And now we're at zero trade balance. So what's going on? Well, either prices have gone up 300%, but exports are stable, or exports have fallen significantly and prices have also gone up, right? Or there's no exports and prices have gone up. So you have to, like, how do you handle the double shift? And I think Germany's exporting something, but they're probably not as much as they normally do. And I can guess because of COVID and a bunch of things. And the supply chain problems, got it. And lack of semiconductors, got it. I understand all of that, but I could go deeper and find out the actual quantity, do the microeconomics on each individual, but I can just say it's less than normal. Whatever, who cares why? It's just less. I understand all the variables and they've all had their impact. But I've also seen the cost of the imports skyrocket, and now I know it's a double shift. It's definitely supply, it's definitely demand, and holy smokes, one does not support the euro, and the other one threatens the euro. So how long is that going to last? Hell, I don't know. Why don't you keep watching? Track the data. Track the data. This is what we do. And if you're smart about what you do, okay, then I don't know. You know why things are doing what they're doing. Cool. Quickly take a look in the world today. Okay. What do you think of that? This is what Johnny was talking about. Okay. Holy smokes. Okay, check this out. So what's the target? Okay. This is the sell. By the way, I gotta flip this. This is just set in the standard. Day trading, I guess confluence bearish. Okay, there we go. All right, so what is going on? Okay, what's going on? Okay. This is a swing trade. This is what we call a swing trade. Okay, that is a WM3. The target is WM1. So let's find that. WM1 is 102.75. So somewhere between 102.75 and 100, there can be a bounce. Why? Profit taking for bears. Now, the other way you could look at this is have an even longer point of view. And if you're going to sell at 111.40, okay, that actually tells you $90.80. So you got two. If you're a bear, you either take profit around 102. It could be about 100. Okay, or you're taking this down to 90. Okay. Now, as a trader, you look at that and say, well, where are my 3 opportunities to buy? Okay. One would be now if you're a bull. Okay. And one would be down here if you're a bull. So you're either a buyer at this, it's 104, 105. It's actually 103. So we call this an Arctic turtle. So, right, you might have something like this if you're a bull. I'm not telling you to be a bull, but that's how you put together a plan. Or the next one is way down in here. You're buying in at 90 and you're going to hold it targeting 150. Okay. And that's a big move. Okay. Okay. And I will teach you the technicals here as part of the oil trading class. And then over the course of several weeks, I will work with you every day so that you can set up the technicals the way that I teach you. Okay? So right now, I'm estimating the class is going to be 15 hours of lecture, 15 hours of trading, live trading together. And I dropped the price from $500 to $250. You don't even need a coupon code. $250 for 30 hours. I'd like you to sign up. I think it's important. Okay? I think it's important. We start tomorrow. That's it. I want you to start. You sign up. It's $249. I dropped it by 50%. I think it's important. Thank you, Denise. Welcome. I'm excited. You're going to learn why, for example, let me pick something. Why World War I happened. And it has nothing to do with Archduke Ferdinand being assassinated in Sarajevo. You're joking. That's what they teach in school. At least in Canada they did, and I think America. That's not why it happened. Oh, the Duke Ferdinand was shot in Sarajevo. We're going to have a global war. Are you nuts? That's not right. That's not accurate. Now, it did happen. He got assassinated, but... Okay? Yeah. Well, I'm going to give you the money back. For everyone that paid full price? Cool. Denise just signed up? Cool. I'm going to send that money to somebody else. So now they paid the half price. I'll take care of everybody. $4 p.m. is the plan, but I'll meet with people, and if people are like, dude, 4 p.m. is not cool, and people say noon is better, then I'll do it at noon. Forex Zoomer said they taught me that history in the EU. It's amazing, right? Forex Zoomer, do you think that that's accurate? That we would have a global war because of that? Wednesdays, tomorrow. Tomorrow. Okay, tomorrow. Tomorrow, I will go over the complete overview. Okay? Then we'll go over the entire history just to whet your appetite. Okay? I learned this information by reading something like 4,000 pages of books related to the history. Okay? And then this is the one I kind of did this one now. Before Upstream, I've actually added a lecture. So what I'm just wrapping up today is I'm going to teach you about coal and the geology of coal, how coal was formed, where you can find it, all that kind of stuff. And then the difference of the, let's say, the chemistry of coal, oil, natural gas, like what are the similarities, what are the differences, but literally how do you find, like, where is it, how is it formed? And you can imagine the layers, right? The layers of Earth going back, over time, and what needed to occur to create all these things. Because you have to understand, for thousands and thousands and thousands and thousands and thousands of years of human history, we just burned wood. That's it. And then we discovered coal, and we started to use it, and it powered the Industrial Revolution. It works really well for creating steam, and it's cheap, and we have a lot of coal. I mean, we could just rely on coal for probably 1,000 years, even at current demand, right? But obviously there's what we call externalities to this. There's costs that we didn't like. And if you've ever seen like Birmingham, England in, 1880, all the brick houses were black, right? So anyway, then how did oil come in? And a lot of people will say, oh, well, it was all Rockefeller was an oil man. Like, no, he wasn't, but we can talk about that. So right now I'm doing the geology. I'm going to teach you literally how it was made. And then I'm going to talk about how do we get it out of the ground, right? Like, I hope you get that I'm geeking out on it, that I spent all weekend working on the geology and the chemistry. Dude, I think you're going to love it. Or at least I'm going to love presenting it to you. Could I do one on gold? Yeah, it'd be interesting. It'd be interesting. But like I said, I got so much negative feedback. I really didn't have a good weekend. I got so much hate mail. I'm like, oh my God. So like to do it again, I don't know. I want this to be a better experience. Man, just vicious, mean. All right. Which one should we do? Guess we should do this one. Let's get a little further out. And this is a critical point here. Critical point is if this is going to hold as resistance. Oh, Maida, I said at the beginning, I sent out 2 or 3 emails over the weekend. I'm all excited about doing the oil trading course. I'm like, hey, sign up, and here's why you should trade oil and all that kind of stuff, right? Pretty basic stuff. And I got a lot of hate mail over it. Mostly 2 things. I'm a scumbag, which I don't think is true. I might be an a-hole. I might be arrogant. But I'm working on it. I'm trying to just be confident, not arrogant. So I can't totally disagree with that. But I think about it and I'm like, I don't believe in my heart I'm a scumbag. I might come across arrogant, but maybe I've earned it. I don't know. And the other one was several emails that, all this hate about I'm only doing it to make money and all this kind of stuff. And I'm like, well, hell, I just gave up my vacation with my wife and my children, been working my ass off for days and all this. And then all of a sudden, and I'm all excited. I'm bubbly and giggly like a child, and then all of a sudden just hate just started rolling in. But I thought about it for many, many hours. I thought about literally what would Marcus Aurelius do? And I'm like, all right, people are trying to communicate and it's easy to hate. And right. And I think a lot of people that know me might feel bad and not give me the feedback that maybe the mean people would. Okay. So there's people I don't have relationships with, and then there are people I have relationships with. And I realized what the people are telling me, the nasty grams, what they're telling me, because they don't have a relationship, they could just be brutally honest. Okay. And they're like, it's too expensive. But boy, it took me a while there. I just wanted to I don't know, whatever. So I'm like, okay, they're telling me it's too expensive. And people that know me and have a relationship would never send me that kind of, but they wouldn't say, look, I don't want to sign up because it's too expensive either. Right. So I said, that's what it is. And if all this email, the hate stuff is like, I'm only doing for money, well, then I'll address it. So what I did is I just dropped the price by 50%, no coupon codes. It's half price, right? I got to $500 because I paid at least $5,000 for one of my classes on the oil industry. So I thought 500 seemed reasonable, but apparently I was wrong. So now it's $250. And it was and I apologize, and I still apologize if I came across wrong, if the marketing was bad, if my communication was poor, it just rubbed people the wrong way, then all I can say is I apologize, drop the price by 50%. And I hope you want to join me because I'm still super excited. Right? Well, Thaco says, never mind this company. Well, but the thing is, they are communicating and I have to listen. At first I was like, F you in my mind. And then I was mad at just everything. And then I felt depressed. Like, my God, this is what people think. And obviously I'm not. So anyways, then I felt really bad. And then I'm like, oh my God, and then I had to think about it a lot more. And then I'm like, I need to listen instead of pushing back or running away. And this is what I'm learning in Stoicism, right? Instead of pushing back or running away, I need to stop and listen. And this is my best attempt at stopping, listening, and sharing my honesty with the entire world, which is, brutally difficult too. So it is what it is. So hopefully other people sign up and I'll take that money and I'll give it to the original people, and we have more, and there's going to be more people, I hope, and it'll all work out and everybody's happy and we're going to have a great time, and you improve your skills and your knowledge. And honestly, you will be an expert in the oil industry. Like literally, we're going to talk about the geology. Okay? This is where I'm already 3 weeks from now, in the geology. And then conventional oil and infrastructure, and then unconventional like fracking. You're going to become an expert in fracking. My gosh. Geek out with me, guys. Geek out. I need you to be part of it. Okay? Okay, come on. Join the group. We start tomorrow. All right. So that's that. And we did dollar, and we did we did oil. Gold, I'm still the same. I've expressed this in great detail, and it's doing what I would expect it to do. My plan today is to buy a stock market short the stock market ETF. So I'll be hedging from now. I've deployed the capital I wanted to deploy, and so I have a little cash left over for this is my retirement account, my corporate retirement account. So I'm going to buy one more investment, and that'll be like a probably S&P 500 short ETF as a hedge. So if the stock market continues to fall another 20%, I'll have some hedge on there. So that's my plan there. And if I'm doing that, gold is likely to fall as well because people are going to cash. Okay? But you also have to ask who bought, because during this period, the stock market was, right? Was, well, it wasn't the stock market really. It had more to do with the bond market and the flow of capital. And this was central banks trying to weaken their currency. And right now, with inflation, they're probably wanting to do the opposite. They probably want to strengthen their currency because a strong currency is deflationary. So maybe, but I think I will be buying this, but probably not till next year. King Bob, I can attest to something like this. King Bob's like, what's going to be the incentive if everyone wants to focus on crypto, then focus on crypto. But like the other argument I hear a lot is like, we're not going to use oil 50 years from now or 25 years from now. Everyone's going to drive a Tesla. Okay, well, couple of things. Let's say with improved technology, we will use 50% less oil. Okay? Oil and gas. Oil, gasoline, or whatever. Okay? Let's say that's true. But that doesn't necessarily mean that oil is going to go zero. Oil could go to $250 a barrel. Even, or maybe because we use less. So it'll still be an asset to trade and to hedge. They'll still be used. And in some places like, let's say China buys a lot of Teslas, right? Cool. And they plug them in to charge the battery with electricity. Okay? That gets powered by coal. That's weird. Okay, because once a week, a new power plant is opened in China that's powered by coal. Which is funny. So maybe, right? And so now the next thing is what we would like to do is probably get this over to nat gas instead of coal. But right now it's coal. And, so it's funny how like it takes a while, a long time to get these alternative sources of energy. Okay. But what you'll find is as we get off oil, let's just say we have 100 years of oil left. I mean, crude. Okay. Crude oil. From that, we can make gasoline and jet fuel and plastic. Okay. But as the alts start to get used, demand for alts go up, we use less oil, and so all of a sudden we have 200 years of oil. Now, much of our stuff will be used by alternative energy, like, let's say, solar, wind, hydropower, so on and so forth. Cool. But it'll just keep oil around longer and longer. And some people will say that's the sort of the worst part of natural gas. Natural gas, okay? Natural gas is much cleaner than coal. So it's good if we're moving away from coal, like in the United States, we're moving away from coal and we use natural gas to create electricity, which is way better than coal. But terrible compared to just using the sun. And so, but now because we have a lot of natural gas, there's very little incentive to use the sun. So anyway, so now you use nat gas, but which is good. And then, so that's an improvement, but it's not the best improvement, but it's a big improvement. And so that, and therefore we can use oil for different things. And if your cars are then charged by a natural gas plant that creates electricity and sends it to your Tesla, and your Tesla holds it in a battery and converts that, well, that's really cool. So there'll be less demand for gasoline, which then means maybe we end up having 200 years, and actually those prices could go up because there'll still be demand for what we need. And then what'll happen is investment gets made in the right ways and different ways, and things will change. But I would never say like it's all going to go away. Now, I think in the future, energy will be free. And it's going to be epically awesome when we get there. And then with energy being free, we can take the salt out of the oceans. Not all at once, but you can suck water out of the ocean, take the salt out, and now we can irrigate our fields and have food for the population. There'll be so much food that food prices will fall because the supply of food goes up. Problem is we don't have any farmers anymore. The average age of a farmer in the United States is 58. In 10 years, they'll be 68. They'll be retired. No farmers. So we're going to have robots. So, but now you don't have to pay the robot. And the irrigation's free. And the energy's free. And all of a sudden now we have plenty of food, plenty of water, plenty of energy. And society is going to change, but I think in a better way. I'm an optimist. I think the next 250 years is going to be amazing for humanity. Amazing. The world is going to get to be a better place. And I can tell you, it's not a perfect world now, but it used to be a lot worse. Okay. Okay. And you can look at things like life expectancy. Even the average height of people. Have you ever gone to, a historic site that was a few hundred years old? And you see that the doors are like a foot shorter, stuff like that. The world is not perfect, not even close, but it's a heck of a lot better than it was 100 years ago, 200 years ago, 300 years ago. And I think 1 or 2 or 3 years, 100 years in forward, it's just going to get better and better and better. Probably not to a utopian paradise, because I believe in the Matrix where we want discomfort. But nonetheless, keeping the power on South Africa, it wouldn't be a problem if it was free. So that's enough. I got to go. I have a meeting, in fact. I got to go, yo. But it was been real. Again, if I come across as an arrogant prick It might be true, but I don't mean it to be. But I'm definitely not a scumbag. So I apologize for coming across wrong with this course. I hope to see you there. I'm excited. I want people to be involved. I think it's important to you and to your career as a professional trader. So I hope to see you tomorrow. And with all that, peace on earth. May the pips be with you. May our profits be above average. Hope you have a wonderful day. I will see you at 7 p.m. if you're in my my day trading group, and we will set up Asia before the Asia Open. And tomorrow I will see everybody at 4 p.m. to do lecture 1 of the oil trading course.